Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing JetBlue stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a small cap company, 1.7 billion market cap. They're trading at $5 a share and they have 349 million shares outstanding. JetBlue provides air transportation services. They operate mostly Airbus 320 and 321. The company serves 100 destinations across the US, the Caribbean, Latin America, Canada, and Europe. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Free cash flow did look good in 2021, 647 million. But they really struggled after that. Big negatives, negative 500 million, negative 800 million, negative 1.7 billion in the trailing 12 months. It appears they're investing a lot for the future. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's negative every single year. And they had their worst year in the trailing 12 months, negative 947 million. Revenue is a sales for the company, and that went up nicely from 21 to 22, 9.2 billion, up another 5% into 2023, down 3% into the trailing 12 months at 9.3 billion. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 6.5 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $2.4 billion. We divide that by 349 million shares. And we get a calculated stock price of $7. They're trading at $5, so they're trading on a 29% discount. It's a buy according to the model. Do you think it's a buy or a sell? Let me know in the comments. Wow, Simply Wall Street does not value this stock. Something must be wrong. 13 analysts priced this stock at $5.42. They say it's undervalued. There are 16 companies in the same industry as JetBlue. And if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a lot in CapEx, 1.7 billion, more than the average. Debt to equity ratio 2.2, so they're a bit leveraged. For every dollar of equity, $2.20 of debt. This company in Southwest generates the least amount of free cash flow, negative 1.7 billion, which happens to be their market cap, 1.7 billion. A really nice price to book, that stock price over book value per share. We can't look at their PE, negative earnings. We can't look at their price to free cash flow, negative free cash flow. A really attractive price to sales, 0.2, which implies their revenue is 5 times their market cap. But they're not growing as much as their peers. Their 5-year annual revenue growth rate is only 3%. The average is 4%. Here's their income statement for the second quarter. Revenue is down. It was 2.6 billion, now it's 2.4 billion. Passenger revenue is down a bit. Other revenue is up a little bit. Payroll is their biggest expense, 800 million. Then fuel, 626 million. Up a little from last year. They used to do a really good job hedging their fuel. I think that's the reason their fuel is not up that much. Because when we looked at other airline companies, fuel was up year over year. Landing fees, they have to pay airports to land there, 180 million, depreciation and amortization, 160 million, repairs, 150 million. So total expenses, 2.4 billion, identical to last year. Operating income, 57 million, a lot less than last year. They spent 63 million of interest on their debt. Last year, 47 million. Pre-tax income, 31 million, 6 million of taxes. So their net income is 25 million. That gives them an EPS, earnings per share, of 7 cents. Earnings per share is net income over shares outstanding. So to summarize, I have them trading at a 29% discount. I give them a ranking of 4 out of 10. Would I buy them? 1 out of 10. I don't buy airlines. Terrible ratios, 2 out of 10. Mainly because they have negative earnings, negative free cash flow. Although their price to book and price to sales are good, maybe they should be 3 or 4 out of 10. Financials, 3 out of 10. They have grown their revenue 54% since 2021, but their free cash flow looks awful. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.